Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top story, the new commercial companies law will be delivered in the second half of the year. That's according to His Excellency Sultan Al Mansouri, the UAE Minister of Economy. According to news agency WAM, Mansouri made the announcement while paying tribute to Ayman Farouk Haikal, a legal advisor, for his contribution, stating that the law was drafted in accordance with international corporate best practices. The minister stressed that the law represents a qualitative leap in the national economy that will support the economic wheel and support government guidelines. He added that this comes in regards to economic diversification and towards a knowledge-based economy, in line with the government's Vision 2021. The commercial companies law includes 12 sections addressing different types of companies. Overall, real estate markets remain in oversupply in the capital, with additional new supply still in the pipeline, leading to further increases to market-wide vacancy rates, according to the latest report. Jones Lang LaSalle released its second quarter 2013 Abu Dhabi market overview, which revealed that prime office and residential rents in the capital have stabilised, while retail and hospitality sectors saw improved performance. Prime residential sales prices increased by 5% during Q2, following an 8% increase during the first quarter, off the back of regional investors and the UAE's safe haven status. Meanwhile, prime residential rents remained stable for Q2, following an 8% growth during Q1, partly due to the government regulations to reduce the level of commuting from Dubai, together with government economic development initiatives leading to further job growth. For the hospitality sector, occupancy levels increased by 8% during the first 5 months of 2013, while average daily rates have continued to remain under pressure, declining by 2%. Due to the positive growth in occupancies, RevPAR levels in the year from the year to May 2013 have experienced an increase of nearly 11% compared to the same period last year. Telecom operator Etisalat has announced that French conglomerate Vivendi has formally granted them a period of exclusivity for the acquisition of Vivendi's 53% stake in Maroc Telecom until September the 25th, 2013. According to a company statement, Etisalat's binding offer values Vivendi's 53% stake in Maroc at €3.9 billion. And Vivendi's response will follow a consultation with its works councils. If Vivendi accepts the offer, the transaction remains subject to a number of conditions, including, among others, the execution of a shareholders' agreement with Morocco and securing competition and regulatory approvals and certain other jurisdictions in Morocco's footprint. It added that Moroccan capital markets regulations will require Etisalat to make a mandatory tender offer to the remaining shareholders in Maroc Telecom, which may result in Etisalat further increasing its shareholding. Etisalat is planning to finance the transaction through external borrowings and has already secured a commitment to provide the funds from a syndicate of local and international banks. And additionally, the Etisalat Group announced strong results for the second quarter of the year today, with group revenues reaching 9,882 million dirhams, an increase of 20% compared to the same period last year, and an increase of 3% in comparison to the first quarter of 2013. The UAE has one of the highest mobile penetration rates in the world, with revenues generated by mobile services reaching over 20.4 billion dirhams at the end of 2012. The Telecommunications Regulatory Authority has published its fourth TRA annual sector review, and according to the findings, the UAE had almost 2 million fixed line subscriptions at the end of 2012, while mobile subscriptions reached around 13.8 million by the end of the year. The number of minutes used per mobile subscriber rose by 5.6% during the year. The research also highlighted that the number of internet service subscriptions has now reached around 958,000, and the percentage of internet subscriptions connected by fibre technology also increased by 37.2%, as a result of the customer migration from copper networks to new and advanced fibre-based networks. The proportion of broadband subscriptions that were bundled together with fixed-line services and TV services increased from 17% in 2011 to 31% in 2012. And the total revenue generated by internet services increased by 15.2% last year.